Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, let's guys, as usual, take a look at the euro currency and trying to understand what's really going on and what we could expect from the euro currency till the end of the current year. Well guys, recently on the previous week, when the Federal Reserve has announced its decision to start the tapering of the quantitative easing program, my chief has called me and said, well, I think that we should turn and shift to the United States dollars instead of the euros. And I said, why do you think so? Why are you so sure with it? He said, well, because everybody tells about it, and there are a lot of articles have appeared right after the Fed decision that with the some schedules of the closing of the quantitative easing program, and many of them tells that Fed will close totally the quantitative easing program till the March of the 2014, and that is the common situation. So people stand now in some euphoria about this Fed decision that was so long expected from the Fed Reserve to start the tapering of this quantitative easing program. The recent gross domestic product release just has added some fuel to the fire and was released at 4.1 annual growth. That is really a big number for the United States economy compared to the recent some recent years. So but I suspect that this euphoria or this rush around this improvement situation in this economy is too overestimated. It's a bit overestimated. It's too early to speak that we should expect, as my chief said, 1.22 on US dollar in the nearest future. Because we should believe our eyes and what the market tells us. And currently, if you take a look at the higher time frame charts, I suggest you to read and visit our forum and read our weekly analysis. In general, guys, unfortunately, market doesn't care any direct signs of trading. It doesn't give us any clear patterns, some extended patterns on the higher time frames that could point some extended targets for us and give us significant the direction for the long period. We don't have it yet, but the chart still contains, and in general the situation on the euro currency contains very significant issue that tells us that market still stands around the edge point, around the determination point, and as move to the upside, as move to this downside currently is possible. And personally, I try to avoid some rush decisions about rush conclusions about the situation when just first sign of some improvement has appeared. My experience tells me that once when I trade the futures on the United States Treasury bonds, there was a moment somewhere in 2008 where the first number of non-farm payrolls have appeared that shows on the big increase in the employment, and that was just huge jump in the yield and in the futures of the Treasury notes, 2-year Treasury notes. That was just outstanding jump. But as this data wasn't repeated anymore since 2008 till the recent days, this jump has been just fastly been forgotten by the market participants, and market has erased all this jump that has happened. That's why we need to get the consistency. We need to get some gradual improvement. And what will happen if Fed will announce the next contraction of the quantitative easing program only the next of the end of the next year? And market will start to forget this jump with the 10 billion contraction after 2-3 months when it has happened. So it's a bit early to say that we're stand now on the road to 1.22 on the US dollar, as my chief said. So guys, what in fact I would like to tell you, what in fact I mean with this speech. The idea is that currently, as market hasn't given us clear confirmation and hasn't give us the sign that it's really enabled to pass through these highs around 138.30 area, we can't tell that market now has reversed to the downside. We need to get at minimum some reversal pattern on the daily time frame chart that could give us the confirmation that market is really there is reversing. So we need some reversal pattern. Usually when the market shows the reversal on the higher time frames, on the monthly time frame, on the weekly, it turns to appearing on some extended pattern on the daily time frame. Usually this is extended head and shoulders, butterfly or something of that sort. And it's a very tricky moment if you will combine the chart, the monthly chart and the weekly time frame chart. You'll see that in fact on the weekly time frame chart, market is forming the butterfly cell. But the target of this butterfly cell is 1.44. So could it mean, for instance, that market is really feels the pressure of the United States dollar accumulating the power, but it's not sufficient yet to show the reversal? So market in fact could continue to the 144 as the rest of the momentum exists on the market and gradually turn to the reversal by this butterfly. Who knows, that's also happens. Sometimes technical analysis give you really unexpected solutions for the setups that you just can't even imagine by yourself. That's why as market is still flirting around the previous tops, we can't be sure that market is really reversed to the downside until we won't get any clearer pattern. That's what about the longer perspective. In fact, you will find a bit more extended explanation, more analysis with the discussion of the monthly and weekly time frame chart if you read the research. But in the two words, that's really an interesting situation. Speaking about the short-term perspective, here guys as well, on the daily time frame chart we see that trend has shifted bearish, but this plunge down as the reaction on the Federal Reserve solution. But here, as you can see on Friday, as we have expected, market probably will show the respect of this support area, confluence support on daily, to the 50% of this move down. That has happened. But what also has happened? Market has formed a high wave candle. What does it mean? It means that market stands in decision, and this also could be some sign of the apathy to the action that market now is showing or something of that sort, or this is the reaction on the approaching Christmas day. So market just now stands in decision. And in the current situation, we also could get here the butterfly butterfly sell pattern. Why not? If market will show some extended retracement, turn to the upside, that could give us the butterfly sell, and market still could pass through this area. We do not know yet for sure, because until market holds above these lows, the butterfly opportunity will exist. That's why as market will become thin in the nearest future and it's approaching to the Christmas, very often market start to coil in the some range within the holidays. We probably will have to deal with very short-term patterns and short-term trades, short-term targets. We can't marry any position right now because just because we do not have any pattern that could tell us this direction, and we do not have any pattern that could appoint these targets for us. That's why we will have to deal with some short-term trades, and one of them is some minor continuation of this possible initial impulse to the downside. So as retracement has happened right back up from this confluence support, market probably will try to attempt to continue move lower. And I can't exclude that market was trying to reach the lower body of this consolidation, because you can see that the major levels 136.14, the 3.8 major support from that low to this high has been tested yet. Also take a look that this level is accompanied by this weekly pivot point, weekly pivot support 1. It's 135.93 area, 136.14 area. If you drop your time frame to the hourly time frame chart, you'll see this respect. This here was our butterfly, by the way. So we see this bounce up. Market hasn't quite reached the 50% level, but take a look that it has stuck in this natural support resistance. So that was the support against support, breakout. Now it has become the resistance. I do not know. Maybe market will form some ABCD to the upside and will hit the 50% level here. It's not quite clear. But as this momentum down exists, some market probably will start to form some sort of ABCD down. And the minor target, the minimum target that we should stick with is the 618 extension. And take a look. Right now, it coincides with the weekly pivot support 1 and the lower board of daily conference support. That is the high probability target. And to choose some more extended target is not quite reasonable in the current situation. That's why if we will get the opportunity to take the short position here, the target that we should be focused on to the downside is right here. It's 135.95 area, 136 approximately. So that's in fact all that I can say about the euro currency right now. Situation potentially on the higher time frames is really significant and really interesting, because as it will be a bit more clear, it will become more clear, it will give us the direction for extended period, and we will be able to appoint some extended targets and gradually move to it. But right now we probably could deal only with such sort of the targets that just we have discussed here on the hourly time frame chart.